All right, ladies and gentlemen, we're back with a rare Friday podcast edition. Normally, I don't do these on Fridays, but today I felt that I needed to do it. So, for those that know and for those that don't know, today the jobs numbers came out, and of course, there was a lot of conflicting information. And when I mean conflicting, I mean conflicting. Then on top of that, you got the government agreeing to increase the debt ceiling one more again, and it's unfathomable. It's not what you wanted to see because everything that the Fed is doing is working against itself. The jobs numbers are saying hike interest rates, but the unemployment rate is saying hike or even pause. So it's saying two different things at the same time. Yes, the payrolls soared by 339,000, blowing away highest estimate, even as people employed tumbled by 310,000, sending the unemployment rate even higher. Think about that for a minute. A lot of weirdness as a result of manipulating the numbers. Now, the scenario went a little something like this. Coming into today, the, the government had two options. They could say, we're not going to pass the debt ceiling and let the chips fall where they may, or they could have passed it. Each decision has terrible consequences behind it. The other thing that was in the mix this morning was if the unemployment numbers were really, 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 really bad, then it means that, believe it or not, the economy and the condition of the country would collapse at a slower rate, believe it or not. However, because the numbers were mixed and because the government did increase the debt ceiling, what we have now is a continuance of an economy that is reliant upon stimulus. So now that the US economy is totally dependent on trillions of dollars in stimulus and speculative gains reaped from the stimulus, there is no real economy left to pick up the pieces when the credit stimulus speculation bubble implodes, bursts, pops, which it is going to do. They've chosen the way of pain, to quote from Lord of the Rings. They have chosen the way of pain. So now here's what's going to happen. Instead of letting the stock market fall and let the price action discover itself and work itself out like markets, like free markets do, the government decided more intervention is needed. So they've turned on the printing presses, they've fired up the laptop, and now the Federal Reserve is pumping zillions of dollars into the stock market. They've chosen hyperinflation as the tool, as the medicine to fix the broken economy. But it's not hyperinflation as you think. Instead of hyperinflating things outside of assets, they decided, no, we're going to hyperinflate the stock market. We're going to hyperinflate the markets, which is worse, way worse. And I'm going to explain how and why this is going to be worse. Because now what they've done is they have ensured that the economic depression in the United States is now going to accelerate. Instead of being manageable, they've made it worse. They have repeated the same dire mistakes that they did in the Great Depression. The Great Depression would have been over years before it was. It was made worse after the government meddling. That's what made the Great Depression happen. There would have been no Great Depression if they would have just left things alone and let the free market work itself out. But no, instead they say, no, we need an interventionist market, not a free market. The US has never had a free market in your lifetime. It's always been an interventionist market, not a free market. So when economists speak of organic growth in this stimulus economy, they're referring to growth that arises naturally from the expansion of population. Advances in productivity gained from better training and wise investments and the fruits of innovation. So, organic growth doesn't need constant stimulus, nor is it dependent on speculation. It doesn't need to be juiced over and over again constantly by central banks and government in order for it to function. In an economy that isn't dependent on stimulus, the role of central banks is limited to being the lender of last resort in periodic financial crises. And government's role is to serve the common good by funding what fosters the common good, but isn't profitable enough for private companies to pursue. For example, rural electrification and critical infrastructure. Hint, hint, wink, wink. Now, compare this real economy with the artificial economy we now have that is completely 100% dependent on central banks and government stimulus and rampant speculation. Now, if either the stimulus or speculation disappeared, the economy would collapse. Without constantly increasing monetary and fiscal stimulus, the asset bubbles inflated by the stimulus would also collapse. Every decision in this stimulus speculation dependent economy is keyed off of Federal Reserve stimulus or federal spending guarantees. So consider the decision to buy or build a residence to live in or hold as an investment. This decision is now key to Federal Reserve manipulation. Scrape away the sugarcoating, and this is what it is. All right. Of mortgage rates and the market for mortgages, including mortgage backed securities, the federal government backstops and guarantees these instruments. This has been going on for over 2 decades. All this stimulus is sold as help, but it ends up helping the wealthiest few at the expense of the bottom 90%. Don't ever forget that. That is a fact. To those pushing stimulus, the soaring wealth of the top 1% is considered success because that's their circle of colleagues and pals. But if we're doing great, everyone must be doing great. Such is the hubris and denial of our financial and political leadership. Now, all this free money, fueled by a dependency on speculation for growth, a dependency that has hollowed out the economy, as a direct result of all this stimulus, 2 decades worth, and credit, corporations have bought tens of thousands of homes as rentals. So it's not enough that they're robbing you of your future and your grandchildren of their futures, but now they're buying up all the property as they push out the current homeowners because they lose their homes to foreclosure because they're taking their jobs away from them. They thank them by buying their houses, knowing that they can't even afford to rent it back to them because the people can't afford to rent the place. So, thus inflating another housing bubble in the process. Investors have snapped up tens of thousands of these dwellings to cash in on the short-term rental, such like the Airbnbs. So effectively, this is distorting the long-term rental market and pushing rents to astronomical levels of unaffordability. So you have debt and stimulus tracing parabolic ascents to unbelievable levels. However, what goes up must come down. Eventually, they collapse under their own weight. You ever listen to the conversations of the crackhead on the street? They always have a story or an excuse. Every crackhead proclaims, I can stop at any time. Now that the U.S. economy is totally dependent on trillions of dollars in stimulus, reaped from the stimulus, all these gains, there is no real economy left to pick up the pieces when the credit stimulus speculation bubble pops. And so we're treated to the infantile charades of the Federal Reserve and elected officials, saying how wonderful everything is while in private with the mics safely muted. Got to make sure it's not a hot mic. They're desperate to push the inevitable implosion just a few more months down the road. Kick that can as much as possible. They have no alternative and no way to return to an unmanipulated economy that isn't dependent on ever larger injections of stimulus and parabolic increases in debt. The problem is the U.S. economy has run out of veins for the coming injection of stimulus. The cost of dependency on artifices of stimulus and mood enhancement, everything's just wonderful. Well, the bills come in due, and they always come due. Unfortunately, though, there's no solution other than cold turkey, the collapse of all stimulus and all speculation. We're about to find out just how unpleasant cold turkey can be, and babbling rants of denial will only make it worse, ladies and gentlemen. This is why we're facing the storm before the storm. Now, I don't know anyone that will argue that the U.S. economy is in great shape right now. Inflation is absolutely out of control. Large companies are conducting mass layoffs all over the nation. The housing bubble is starting to implode, and more homeless encampments are constantly popping up in our major cities as poverty spreads like wildfire. But this isn't the main event. Nah, this is just the storm before the storm. Because the truth is that this new economic crisis is still only in the very early chapters. Unfortunately, much more suffering is on the way, and our country is not going to be able to handle it. The USA is going down, and the American people cannot handle it. They won't be able to handle it. You don't agree with me? Well, that's all right. I've been on YouTube over a decade now, and people don't always agree with me anyway. However, you have to admit that things are clearly trending in the wrong direction, if you're being honest with yourself. According to Challenger Gray and Christmas, the number of jobs cut that employers announced in May was 287% higher than the number of job cuts that employers announced in May of last year. US based employers announced 80,089 cuts in May, a 20% increase from the 66,995 cuts announced 1 month prior. It is 287% higher than the 20,712 cuts announced in the same month in 2022, according to a report released Thursday from global outplacement and business and executive coaching firm Challenger Gray and Christmas Inc. It would be one thing if the month of May was some sort of statistical anomaly, but it wasn't. In fact, for the first 5 months of 2023, the number of job cuts is up a whopping 315% compared to the same 5 months last year. Digest that for a moment. Other than during the lockdowns of 2020, we haven't seen anything like this since 2009. And those that are at the top of the economic food chain are leading the way. For example, we just learned that Goldman Sachs is planning to conduct a third round of mass layoffs. Goldman Sachs plans to make another round of job cuts, its third, mind you, in less than a year, as deal making profits continue to tank, sources told the Post on Tuesday. The David Solomon led investment bank will call an additional 250 workers on the heels of 3,200 being fired in January in what staff had dubbed David's Demolition Day, according to an insider. Economic activity is really slowing down all over the United States, and this is the beginning to show up in the corporate earnings reports. On Thursday, Macy's announced the same store sales actually fell 8.7% during the most recent quarter. In an earnings report on Thursday, Macy's said same store sales sank 8.7% last quarter, forcing the New York based department store to cut prices on clothes and other discretionary items. All right. Macy's results concluded the retail industry's earnings season, which showed how stubbornly high inflationary, particular in food, is forcing shoppers to further cut back on discretionary items like clothing to afford their soaring grocery bills. Let that sink in just for a second. And I need to pause for one moment, so give me just a second. That's the thing about when you're doing live, when things happen in your environment, you have to deal with it. All right, so back to the layoffs. So Dollar General also announced very disappointing results as well. And that resulted in a wild sell off of Dollar General stock, got straight up punished. Meanwhile, Dollar General, which caters to low income shoppers and is the fastest growing U.S. retail chain by store locations, also cut its annual sales and profit outlook on Thursday, sending the company's stock down 19.55% for the day, not the month, not the quarter, not the year, but in one day. A 20% decline in one day is enormous. So, why is Dollar General performing below expectations? Well, the CEO says that their core customers are very financially stressed right now. In fact, he says that many of them are having to rely more on food banks. Unfortunately, our customers are saying they're having to rely more on food banks, savings, credit cards. CEO Jeff Owens said on a call with an analyst on Thursday. The company says its core customer makes less than $40,000 a year. Owen also said he believes customers were caught off guard by reduced tax refunds and reduced SNAP benefits, which exacerbated the inflationary pressures they were already experiencing. Now, Dollar General's results echo those of rival Dollar Tree, which also came in below investors' expectations last week and cut its profit outlook for the year. This is only the beginning, folks. There is so much suffering out there right now, and it is only going to intensify as more Americans lose their jobs in the months ahead. If the Federal Reserve had not raised interest rates so aggressively, that would have greatly helped matters. But instead, they have chosen to bring the hammer down on the U.S. economy, and now the average rate on a 30-year fixed mortgage is almost up to 7%. The rate on the 30-year fixed mortgage rate rose to 6.79% this week from 6.57% a week ago. 1 year ago, it averaged 5.09%. Mortgage rates jumped this week as a buoyant economy has prompted the market to price in the likelihood of another Federal Reserve rate hike, said Sam Cater, Freddie Mac's chief economist. Although there has been a steady flow of purchase demand around rates in the low to mid 6% range, that demand is likely to weaken as rates approach 7%. As the housing bubble steadily implodes, those that work in the industry are going to have such a hard time. Of course, the truth is that difficult times are ahead for all U.S. citizens. It has become quite clear that nobody in Washington is going to be coming riding to the rescue. The debt-fueled years when easy money was flowing like wine have come to an end, and now a whole lot of pain is on the horizon. Sadly, most Americans still do not understand that a great economic storm is rapidly approaching, and that is extremely unfortunate. Ladies and gentlemen, here's how it's going to play out. Unfortunately, based on the decisions that have been made by your elected officials in the U.S. government, they have chosen to destroy the economy. So here's what's going to happen, and this is what it's going to look like. All right. Okay. So with every point, the Dow Jones, the S&P 500, the NASDAQ, the Russell goes up, American people are going to get poorer. All right. The average American is going to get poorer the higher the stock indices rise. There's going to be a direct correlation between the two. And you're going to see that. All right. Now, what is also going to happen as a result of this poor decision making, you're going to see the U.S. equity markets explode higher to new all-time highs. This is nothing more than a short squeeze, and the U.S. government attempting to manipulate and orchestrate the false narrative that the economy is strong and doing well. Because they know that as long as people view the stock market as a level of U.S. and economic success and strength, then they won't be able to discern or ascertain the truth of what's happening underneath all of that. All right? You tracking with me? Okay, so here's the next step. And this is very unfortunate. All they had to do was leave the economy alone and let the market do what it do. And we could have recovered in about 18 months, between a year and 18 months. The stock markets would have recovered. We would have fell down, hit the lows, took out the earlier lows, hit new 52-week lows, and then the market would have recovered. Believe it or not, it would have recovered. But instead, what they've chosen to do, okay, they have chosen to artificially pump up and prop up the stock market in order to save face and make it look like and appear that the U.S. is still strong. The consequence of doing this, I hope you're ready for it, is that, yes, the market is going to go a lot higher. However, once the music stops, and the music is going to stop, there will be a catalyst yet undetermined that will pop the speculation bubble. And that is when everything hits the fan. Because what happens next is the markets go into a long-term, eternal bear market where you will see asset prices take out the 2009 lows. You heard it here on this podcast first. I'm warning you and telling you exactly what is going to happen. The financial crash and collapse is going to be absolutely breathtaking. All right. People are going to be at a loss for words to even explain what they are feeling and seeing in their portfolio statements. It is going to be the largest market crash in human history. All right. I'm only speaking about markets right now. Stock indices is what I'm talking about. And this time, the market's not going to get up. It's going to stay down. It's going to erase the past 20 years of profits. And a lot of people are going to be wiped out, including the 1%. This financial crisis is going to spark a series of unfortunate events that will lead to the collapse of the United States government. And there will be civil unrest. And this depression will make the Great Depression look like prosperity. That's how bad it's going to be. There are no words to describe what is coming on the back of the stock market rally. Just take a look at just today's activity. Bitcoin is barely holding on, up only 260 at 27,000. Ethereum struggling to stay above 1900. Silver maintaining, struggling to stay above $23.80. Gold down $20 at $1,975 and barely holding on. Meanwhile, the US dollar is up 38 pips at 103.94. Are you starting to see the disconnect? And your Dow futures is up 622 points. The market has rallied from 33,113 this morning to 33,745. The S&P rallied this morning from a low of 42.28 and 3/4 to 42.87, almost hitting the 43 handle. The NASDAQ 100 has rallied from 14,470 this morning all the way up to 14,627 and 3/4. And the Russell has rallied from 1771.5 this morning all the way up to 1815.8. Ladies and gentlemen, this is what engineering looks like. When the Fed wants to engineer a rally in the market, this is what it looks like. But I'm here to tell you the wheels are about to fall completely and utterly off this wagon. Now, you should know that when you look at the long-term trends versus the intermediate trend, so the long-term trend in the Dow is bull market, and the short-term trend has just changed to bull market too, but it lacks the momentum. There's no momentum there. You just have the chart pattern, but you have no momentum. Momentum leads price action. This is a manipulation today. You're actually seeing what stock manipulation looks like when the Fed is at the laptop pumping asset prices. This is what it looks like. You had negative momentum coming into today in the Dow, and yet the Dow has exploded over 600 points. That's pumping. The S&P 500 coming into today was in a neutralized state and has been very weak for a long time. The NASDAQ 100 coming into today was also in a neutralized state. The only one that wasn't was the Russell. And guess what? The long-term trend in the Russell is bear market. And so is the intermediate trend, ladies and gentlemen. But yet the Russell explodes today and gets above 1800. Think about this, folks. I want you to see what I am saying. All right? You gotta understand what's going forward. The Fed is actually pushing and propagating an artificial, I want you to hear me, an artificial algo shift in the markets to make it look like prosperity. This rally today is not real. A one-day rally does not a trend make. This is a short squeeze. For anyone caught short, they get stopped out, and then they're tempted to get long the market so they can pull the rug out from underneath you on that one too. This is an unsustainable event. It's a one-day event designed to make it look like the Fed knows what it's doing and your elected officials are brilliant. So they pass the debt ceiling, and then your economic numbers come out looking janky as I don't know what. But if you got the Dow up 600, it makes it all look great. Like everyone knows what they're doing, and and your government loves you, and they have only your best interests at heart, and nothing could be further from the truth. I guarantee you, in the next 2 weeks, you're going to be surprised by what you see in these markets. I warned you a long time ago that the Federal Reserve has the largest trading account in the world. They have unlimited resources. They can push markets any way they want. Today, they're keeping your Bitcoin and your precious metals at bay, not allowing them to rally, keeping the pressure there, the short selling pressure there, while removing the short selling pressure in the equity market. This is what it looks like, folks. This is what market manipulation by the Fed looks like, because that's what it is. How can a market rally with no momentum? It can't unless the momentum is artificial. And that's what you're seeing here today, folks. An explosive rally in a negative momentum environment in a neutralized market environment. The last time we saw this was last year's that last CPI reading that came out, and the Dow rallied 800 points. Remember that? What did it do right after that? It immediately gave all that back and proceeded to decline rapidly. Pay no attention to what you see on your screen right now because it's artificial and it's not going to stay that way. You'll see. Now, if you want to know how to play this and you want to get rich, you're going to need the power of the pulse waves behind you. You go to pulsewavetrading.com and you can take the 14-day free trial. You'll get these reports that we place in your hands. They will tell you exactly how to proceed with these markets. Come Sunday night, it's about to be on and popping in these markets, and you're not going to want to miss it. They're crushing gold and silver and Ethereum and Bitcoin futures today because they know what's coming. When you wake up on Monday morning, you could be like, "Oh my goodness, gold is really up $100. Silver's up $5. What? What's going on? What's the breaking news?" There is no breaking news. They know the order flow, ladies and gentlemen. They always allow a market to be crushed. They crush it when it's about to explode. And what markets have been crushed the most over the years? It's been Bitcoin, the Ethereum, gold, and silver. They have been attacking those markets systematically for years. But now these markets are about to explode. And guess what it's going to take with it? Your grain markets. That's right. Soybeans, corn, and wheat futures are about to go lock limit up. And they're probably going to do it all summer long. Remember that summer of 2008 when crude oil futures rallied to $150 a barrel? The market literally rallied every day for the entire summer, as did pork bellies. Lock limit up every day for 2 months straight. That's what you're going to see that is about to happen in both precious metals, Bitcoin, and Ethereum. So I hope you are ready, because these moves are going to be fast and furious, and they're going to be very difficult to get involved if you're not already. One of the tricks that they like to play is once the precious metals markets get really hot, they'll start raising the margins. They start raising those margins. I remember the days back in 2011, 2012. I know you guys remember it too. Remember when they would change the futures margins intraday? I think we clocked one day, it was 3 times in one day they raised the margins. And not long ago, when Russia initially invaded Ukraine, they restricted even trading wheat futures. So they were only accepting orders to liquidate positions. You could not put on any new positions in the grain market, especially in the wheat. And that lasted for a long time. Even after the prices subsided, they still had a lock where they prevented you from operating in the market. They were only accepting closing positions. I don't ever remember a time where they restricted access to the futures markets. The only time that ever happened was on 9/11. All right, when the markets reopened a week after 9/11, there were restrictions all over the place. And that could be understood. The worst disaster in American history had just transpired. Of course, that all makes sense. We're okay with that. We're not going to complain about that. But because Russia invaded Ukraine, now you're saying you can't participate in the grain futures? Commodity futures markets exist for the sole purpose of being able to prosper off of calamity. So when you shut people out of participating in the futures markets when the calamity happens, you've just taken away the sole purpose and the existence of speculators in these markets. The speculators are the ones that provide the liquidity for the users and the producers. Duh. We exist for that. These markets were created so that General Mills and Kellogg's wouldn't have to suffer catastrophe if there was a drought or something and they couldn't get their grains and their oats or whatever, their corn. And then the speculators, we exist as liquidity so that they could hedge said positions against these uncertain risks. So when you lock the speculator out of the market, what you are doing is cutting off liquidity in the futures markets. Not a smart idea. And then they come up with the excuse, well, because of the extreme uncertainty and volatility, we engage in leveraged instruments because of the ability to use margin. All right, and leverage. That's why we participate in leveraged instruments. We want the leverage. We understand the risk. We understand the uncertainty. So to take the liquidity out of the market, again, what is that? That's meddling. That's manufacturing an artificial environment in the market. We are in an interventionist system. They will not allow free market capitalism to reign, rest, rule, and abide. Ever. Not now, not ever. They're afraid of that because then it would expose their false narratives. And it would also expose their corruption if they were ever to do so. That's why they don't do it. No matter how much people complain and moan about it. You can call your senator all you want. They're not going to listen to you. They don't listen to you. They don't work for you. Your senator does not work for you. Your senator works for the interest groups that got them elected. You did not get them elected. The secret societies got them elected that they represent and work for. Okay? So it is what it is. So I just want to put you guys up on game and let you know what the gameplay is. This is the strategy moving forward. I can't wait for Sunday night. It's going to be on and popping. Now, it's going to be important how these markets close today. And I'm almost guaranteeing you that they're going to let the markets close exactly the way they are right now. That's the way they like to do things. Remember, they warned you guys. They told you guys that they like to pull the okie doke. They wait until the markets close on a Friday. And then they close all the banks and say, oh, we're having a bank holiday. The ATMs don't work. Your credit cards don't work. Oops, we forgot to tell you that. Oh, well. Remember, they said that's what they would do. They would wait until a Friday. Well, today's Friday. Every Friday that comes and goes from now on, you should be weary and not get caught flat-footed. All right, I'm off my soapbox. I just had to let you guys know what has transpired and where we go from here. And now you know. Do not give up the fight. You got to stay in the game. All right? Stay in the game. Do not be weary. Keep doing what you know to do that is right. They exist to shake you out and to shake you out of your position and your belief systems. They want you to be weary and well-doing. You can't. All right? Traders know. People who've been trading, they know. If you get stopped out of a position, fine. You wipe the dust off your body and you get back in the fight and take the next trade. Because if you don't, and you say, okay, I'm beaten, I'm not trading again, I'm done. That next trade that you just skipped was the trade that would have put you in the black and made you prosperous for the year. But you missed it because you allowed yourself to be weary. You cannot get weary. The system works if you work the system. It's over the long haul. You always hear them talk about the long haul. Think long term. It's a long-term play. You will come out well ahead if you faint not. So you got to be encouraged and hang in there, folks. I'm telling you, the season for us traders is about to hit, and it's about to hit in spades, and it's not going to stop because when the implosion happens, there's going to be nothing they can do. The only thing they'll be able to do to stop it is to close the markets, and they're not about to do that because then they will lose everything. So the only solution they have would be to lose everything, and they're not about to do that. So they're not going to close these markets. But just remember, when you see it come, that I warned you and I told you here first, it's coming. So get ready. All right, folks. I hope everyone has a great weekend. I'm not going to keep you and hold you any longer than that. I felt that I need to talk to you today because of what transpired this morning and what decisions your elected officials have made and what the long-term ramifications and consequences of said decisions are going to be moving forward. And now you know. All right, folks, enjoy. I will see you guys back here on Sunday for my post waivers. I'll see you guys back on Sunday. And everyone else, I'll see you back here on Monday. Enjoy your weekend. Smash that like button. Peace out.